The Trump administration's 14% tariff on Nigerian exports threatens an already fragile trade relationship, raising costs and reducing market access. Nigerian exporters are looking to China for alternatives, as many experts say the country must move beyond raw exports and invest in value-added production to stay competitive. As Ibrahim Shehu reports, the challenge is whether Nigeria can adapt or risk falling further behind in global trade.
Like many African countries, Nigeria is on the firing line for U.S. tariffs, with the imposition of 14% tariff on export. Trade between Nigeria and the U.S. last year worth about $10 billion, which experts consider very low. Prior to the imposition of a 14% tariff by the Trump administration, many of Nigeria's exports to the United States benefited from the African Growth and Opportunity Act, which allowed eligible products from sub-Saharan African countries to enter the U.S. market duty-free. With American tariffs driving up the cost of crude oil and the Russian-Ukraine war affecting the global supply, the price of crude oil could impact Nigeria.
It's good we see ourselves in a positive light, but we are not yet maximizing our capacity to add value in that sense. So for now, we're just producing enough to sell, and any amount we produce, we will still sell.
Nigeria's crude oil production surged to 1.75 million barrels per day early this year, up from 1.5 million barrels per day in late 2024. With crude oil accounting for approximately 75% of total exports, exporters are already eyeing new markets, including China, which is turning to Nigerian raw materials and agricultural products to offset losses from American tariff.
China coming to Nigeria to seek or to buy our cocoa and sesame seed is a good thing for us. But if I am in position of policy making, I prefer to add the value to those products here, or invite those Chinese people, come to Nigeria, come and establish your factory here.
Analysts say the country could expand its exports, particularly in agriculture and processed goods, by taking advantage of government efforts to devalue the local currency, the naira, in order to attract foreign exchange and boost trade.
The devaluation of currency actually have been a good one for exporters and myself. I export value-added agro products, processed food generally. That's what I export. I'm a merchant, meaning I don't have a factory. I have a number of SMEs that produce different products. So when I get contract from my buyer in Europe, I buy from different people and aggregate for export. And the devaluation has really helped, sincerely.
While ports in Lagos are bustling with activities, here in the capital Abuja, policymakers are grappling to leverage on this opportunity. Experts are calling for swift regulatory reforms and investment in infrastructure to ensure that Nigeria does not miss out on this global realignment. Experts say Nigeria could earn more money by adding to raw commodities. For instance, official statistics show that in 2023, it shipped nearly $670 million worth of cocoa beans, while chocolate exports were just over $27 million.
This for me is a good opportunity for us to really put our thinking cap and to invest heavily in the agricultural sector and export finished products. Instead of exporting raw cocoa, we should be exporting chocolate. Instead of exporting sesame, raw sesame, we can be exporting sesame oil or sesame butter. These are all areas that we just have to take advantage of, while the current face-off between the US and China and Canada and other countries is going on.
Soybeans exports are ever on the rise and are projected to jump from 7,000 metric tons last year to 212,000 metric tons this year. According to the U.S. Department of Agriculture, this is due to lower domestic consumption and higher export demand by Nigeria's non-genetically engineered beans.
Nigeria can increase its forex earning from soybeans alone. After all, we have a lot of deal with China to come and build in Nigeria, right? So we can say, China, look, why don't you pledge to buy at least $10 billion worth of soybeans from Nigeria? We will give you this amount of contract to construct in Nigeria. We have that agreement. Then we can go to work and produce agri-commodity en masse to sell to China. Because China demand is about 60%. Global demand is about 100. China alone is buying 60%.
China remains Nigeria's largest trading partner with a two-way trade of over $20 billion, according to the National Bureau for Statistics.
Foreign direct investment is a highly competitive thing. People will go to where they spend less and less hassle. So these things are affecting our capacity to export and the success of our products in the international market.
Nigeria exporters say they face tough competition from cheaper Chinese goods, raising concerns over whether these measures will be enough to safeguard local businesses. Ibrahim Shehu, Trust TV News, Abuja, Nigeria.